Okay, I'm going to try to get through this quickly because I hear the thunder rolling in again. We've had severe lightning storms today, and even some of the businesses are out of electricity, and the electricity here has been going in and out. So I'm going to do a pre-recording, not going to do live tonight. So I hope you enjoy the presentation. And tonight we're going to talk about what and when, what accounts you should have in place. Again, thank you all for returning to complete the learning process of information that is vital and relevant to your financial journey. So I hope that you find some relevance and value in the content shared tonight. So let's get started. As always, the short disclaimer. The information we share is based on our own opinions, experiences, practices, and insight into the strategies suitable to our financial wellness for our family. King's Legacy Group we are not financial advisors, and our videos are for informational, educational, and entertainment purposes only. You must do your own due diligence and seek professional advice when you feel the need to confirm or expand your understanding of knowledge on any topics covered on this platform. Always remember to make smart decisions that suit your own needs and do your own research and analysis. All right, children aged 10 to 16 years old. They're either getting money from an allowance or they're working a part-time job. Like Kayla has a part-time babysitting job, and she also works for King's Legacy Group and Legacy Rideshare. So she has started her journey of generating income and depositing that money into her accounts so that she could build her financial portfolio. So again, wherever your child is getting income from, they need to start their financial habits with two accounts, a checking account and a savings account. This is video 20. Back on video 1 was the first one for Sunday, talking to our children. If you started with us back then, you should have gotten your child or children their bank accounts. I don't know what the holdup is, but there's no excuse. You got $20 to open an account. We all can do that for our children to get them started on the right financial path and teaching them what they need to learn, how to go to a bank, how to write a check, how to read a bank statement, how to balance their checkbook, how to use an ATM, how to use the debit or the card reader at checkout in a store. These are things you need to explain to your children now. Don't wait until they get older and they're trying to figure these things out. The purpose of starting them now is to empower them now, not later. Okay? At the moment of a child aged 10 to 16 having a checking and a savings account, there are other things you should have in place for that child. That child should have a life insurance policy. I would hope a whole life insurance policy and not a term life. I've already explained all that on what's today, Wednesday. I explained that on this past Sunday and this past Wednesday. That policy can be for $20,000, $30,000, $50,000. Start somewhere. And I'm sure your payments for a policy of $20,000 to $30,000, your policy probably be less than $20 a month. Again, you have to make that sacrifice if it's a financial sacrifice for your child. Okay? The premiums are affordable. There's no need for fear. If you have questions, then follow the videos that I've posted and shared. I'm even going to be doing a video with an expert in the insurance industry who has his own insurance company, his own employees and workers, that he has built a $1 million industry. So I'm going to be interviewing him and giving you the answers to questions that you want to ask or you haven't even thought to ask. So stay tuned and let us help you get over the fear or the misunderstanding you have about life insurance coverage for your children and for yourself. Now, talking about juvenile life insurance, as a parent, you should start a policy on your child at age 6 months. If you can afford to do that, if not, change your situation so that you can afford to do that. Start a policy for your baby, okay? Budget and save and never let your coverage lap on your coverage and your child's coverage. It will benefit you both in the end. And having a policy of whole life coverage, you're going to have the opportunity to build your own family banking system with the cash value that will build up within your policies. Okay? This is guaranteed death benefit with continued premium payments after 1 year of life, well, 1 year of coverage. Keep in mind, any insurance policy that you buy, for you to reap the benefits from it, well, that's probably not the word I want to use, but to get the death benefits, you have to have a year put in before you have that actual coverage. For example, you buy life insurance and something happens and you pass away 6 months after you bought the policy. The insurance company is not going to pay out. You have to put in a year worth of time and premium payments before that death benefit actually kicks in. If you didn't know that, now you know, so you definitely should stay tuned for all the other answers to questions that you may have. Okay? A child's policy will double at age 18. Kayla's coverage is $50,000. When she turns 18, her policy is going to double to $100,000. She's already ahead of the game and a step further because of her young age. We have to get this coverage for our kids while they're young. Waiting until we're adults, yes, we can get them, but our age, our income, and our health affects the policy or even being able to qualify for a covered policy. See my computer blinking? Don't do this to me, please. I can't start this recording over again. Okay, the policy accrues cash value that the policyholder can leverage. Cash value is used just like a line of credit to build your family legacy. Age 18 to 25 years old. You need to have separate banks and separate credit unions because you're going to have more than just one or two accounts. One you use on a regular basis, the other account you're going to build and ignore it. Okay? And this is what I mean. For age 18 to 25, you should have at least 2 checking accounts. You should have at least 2 savings accounts. In the savings accounts, one is an emergency fund to cover your bills. Start growing that 3 months, 6 months, until you get to a year of savings for your emergency fund. Now, I'm not saying stop there, but I'm just saying make that your first goal. Okay? Your second savings account should be your emergency savings, the one that you ignore, the one that you don't have a card to, the one that you just let it automatically flow into that account, out of sight, out of mind, and let it build. Set up automatic transfers. Okay? You should have at least 2 credit cards. One credit card should be to pay all your Tier 1 house bills. Your second credit card should be to pay your Tier 2 bills. And I've already explained what tiers are and the category of those bills. Okay? That was part of the budgeting video. The next thing you should have is a whole life insurance policy. Next is your Roth IRA account. Even if you have a job and your job offers 401k, great, utilize it. But if you utilize it, know what your 401k is contributing to. Don't be blind and just let the company choose whatever, and you don't even know if it's really benefiting you, or that you have the options to choose your own so that you can build your own portfolio within your 401k. But regardless of you having your job's 401k plan, you need to have your own independent Roth IRA account. And you can set that up through your bank or credit union. You can set that up through a brokerage firm like Vanguard, Fidelity, Charles Schwab. Those are the top three that I like. My first choice is Vanguard. I use Vanguard for our Kayla and I's Roth IRA accounts. Also, start a money challenge. If it's just you, start your own money challenge at home. The reason I say start a money challenge at home, because that really helps you gain discipline in your money habits. I have started 2 money challenges at home, and I make sure that I put that money in those envelopes and seal them. And honestly, if I didn't have my reminder on my phone to remind me, I forget that the money is here. So it has really helped me with my discipline, and I promise it will help you do the same. Okay? And in the end, when the year is up and you have all that money, then you can plan and decide on what you want to do with that money to help make it grow even further. Okay? Adults age 26 to 50 years and older. Again, you need to have separate bank accounts and separate credit unions. One you'll use, the other you'll ignore, but you need to step up your game and plan your future with aggression. You need to build your credit profile for future objectives, and you need to use a credit builder like Self-Lender, especially if you're starting with new credit or reestablishing good credit. Okay? So, you need to have 2 checking accounts. You need to have 4 savings accounts. The first savings account would be your investment fund. You need to start saving money and put that aside. That's the account that you're going to draw from to put towards and contribute to your stock investments. Okay? Your second savings account is going to be your emergency fund, just like the other one, which is going to cover your house bills. Okay? That's how you building up and saving so that you have a year reserve of your bills covered. But again, you don't stop there. You keep going. Once you hit that 1-year goal, you keep going. Make it a 2-year, or take a year of those 2 and start another emergency fund for something else that you need to control and contribute to. The third one is your regular emergency savings, the one that you ignore, you don't touch whatsoever. It shouldn't be a need for you to touch it because you have all these other things in place as protection and security. Okay? You need to have the fourth one. The fourth savings account would be the one you save money for vacationing, trips, and your holiday fund. This is the money you accumulate to cover Christmas, Thanksgiving, birthdays, Valentine's, all that stuff. That's your holiday fund. Utilize these accounts and allocate your money and control where your money goes and how it is used. That is totally your control. So maximize that. Okay? Next, you should have at least 4 credit cards. This is about building your credit. Okay? This is about establishing credit. Even if you don't necessarily need it right now, you are an adult. You are going to have things in life happen to you. You need to be prepared. Even if you don't want it, you will eventually need it. So be prepared and set yourself up so that when you do need it, you have put yourself in a situation to where it's not a concern, because it's there when and if you need it. Okay? Now, credit cards. It's a plan for everything. I'm not saying get credit cards so you can have all these credit cards, just buy, 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 buy. No, that's not what it's about. It's about you making a plan, creating a security plan. So if you have 4 credit cards, one, you can use it to pay your bills. I've already explained this before. If you pay rent, if you pay utility bills, why not get 2 for the price of 1 and build your credit while paying these bills? You're going to have the money anyway to pay the bills, right? So leverage yourself and put yourself in a better position. Pay those bills on time, and in the same process, build your credit, because your rent and your utility bills are not being reported to the credit bureaus. So you're just paying money and not getting anything out of it. It's a strategy for it all. It's a strategy and a plan. So the second credit card, use that specifically for if you have a vehicle, use that specifically for your car note, your car insurance, and any other insurance deductibles that you need to pay. If you have medical insurance and you have to go to the emergency room, you may have to pay your deductible before you are rendered services. Or if you need to pay a deductible on a car accident that you were at fault for, your insurance company 9 times out of 10 is going to ask you to pay that insurance deductible before they pay for your repairs and the other car repairs. So you have that money available. If you have insurance, if you rent, you should have renter's insurance. You can use that to pay your annual premium, your annual fee. So again, make the credit cards allocated for specific things and only use them for those specific things. You are creating a good payment history with the credit bureaus. You are increasing your credit performance, and you are generating your ability to have increased limits because of your good money habits with these credit card companies. Okay. The third one, use that to pay your other tier 2 bills, whatever those be. Again, allocate what you need for the cards. Okay. The fourth card should be a gas card. Again, if you have a vehicle, you need to get a fuel gas card for your personal. And if you're going to be starting a business, you need a fuel card under the business name. Okay. And also, as again, I repeat, you should have whole life insurance policy. But at age 25 to 50, please step up your game, pay more into your policies to build more cash value, so that if and when you do need to get a loan against the cash value, not your policy, never your policy, against the cash value. If you need it and when you need it, it is there. That could be anywhere from 10 to 20,000 to 50,000 to 100,000. It all depends on you, how much you contribute to build that cash value in your policy. And if you want to learn more about that, then please stay tuned. Okay, I've already mentioned again your Roth IRA. At age 26 and 50, you should definitely have started your own independent Roth IRA. Okay? And again, the money challenge doesn't change. That should be consistent throughout your life, just like anything else you have planned. All right, building business credit. If you ever intend on having your own business, and some of you don't even realize this. Well, some of you may say, I don't want to be a business owner. I don't want to be an entrepreneur. If you have a passion in life, yes, you do. Whatever it is, one day you may want to step up your game and learn how to make money off of your passion. That's starting a business. So, I'm about to say something, and some of you probably never heard this. Even if you are not ready to start a business, still go ahead and do so. Reason being, even if you're not ready now to start the business, but you have in the back of your mind one day you do want to, or you want to be ready to, you can still go ahead and start the process. Only thing you got to do is decide on a definite business name that you know you're going to name your business in the future. So think about that first. Set up a sole proprietorship license. It does not need to be an LLC or incorporation or none of that. It can just be a sole proprietorship. Set that up with your Secretary of State office. When you get that, open a business account. It takes, I want to say, did the lady tell me 25 or was that for personal? It was either whatever the amount is needed to start a business bank account. I know it's not more than $100. That much I know for sure. It's probably 50. So start there, and then you can put in the time, which is 2 to 3 years, to build that business information and credit, so that when you do jump in and you're ready to start an actual business, you have already put in the time that's needed, that's wanted from a lot of lenders that you're going to be dealing with, or banks that you're going to be dealing with to get loans to grow your business. Or just think about it. If you put in this minimal time to just build on it, and I'm going to show you, I'm going to tell you how to build on it, even though it's not active yet. So you're ready. Let's say you don't have enough money to start what they would say your startup cost is, but it's actually not your startup cost because you started the business 2 or 3 years ago. So you have built your business profile and your business credit that will put you in a better position when you need to go after these loans or grants or whatever the case may be. Because the main thing they're going to be looking at is, of course, how much revenue you have. But I'm going to explain that in just a moment. But they're going to be looking at the time that you have been in business. The time you established 2 or 3 years ago. And you've been building on that. So let me tell you how to build on that, even though your business is not actually active right now. No one has to know but you. So you get a sole proprietorship license. You open the business bank account. Even if you don't have products and services to sell for your business, this is how you portray that you do. Start applying. Well, not yet. What you can do is you can buy money orders. Yes, buy money orders and pay. I don't care what amount. I don't care if it's $10, $20, $50, $100, $500. One of those savings accounts you can use for this now. Yes. Take that money, not all of it, but just a certain amount every week or every month. Buy a money order. Write it out to your business. Deposit it into your business bank account. That's considered revenue coming in for your business. If, let's say, another tip, let's say someone always borrowing money from you, okay? And they want you to Zelle them or Cash App them. Okay, when they pay you back, tell them to pay the business account. They could Zelle it or they can Cash App it to the business account. You just set up a separate Cash App for the business account information so that when they pay you your money back, it's going to your business account, and that looks like revenue. Okay? Let's say you get your income tax or stimulus check. Break that up into payments and pay your business account. Again, these little things that you do to pay your business account looks like revenue building in your business. And while you are doing that, you're going to apply for a business fuel card. You're going to apply for a business credit card with your bank or credit union. You're going to, let's see what else. Apply for your Net 30 accounts. Let's say one of your Net 30 accounts is Uline. Okay. You can find something on Uline that you could buy once a month and pay it off before your billing statement is due. I don't care if it's a $30 something that you buy a month and you just pay it off every month. That could be something you use for packaging for whatever you sell in the future, or whatever the case may be. Whatever you decide, if you can use it, great. If not, hold it to be used later in the future. But those little measures, you are showing revenue and you are building your credit before you even have a business that's active. But it will help you be in a better position when you actually start the business and you really need the funding to start your business if you don't have it yourself. You're ready. You're going to be approved more than somebody else who just got started, has no history of business, revenue, or credit. You're going to be ahead of the game. Lord, if I had somebody tell me this before, good God Almighty. It's just common sense, people. Learn how to play the game. That's it. Learn how to play the game. Those little tips I just gave you, you are able to build your credit profile for your business before your business is even active. That's part of your discipline habit. Once you master your discipline and your commitment to financial wellness, the steps you take become so easy. Your peace of mind is so refreshing. Trust me, it is. So yeah, that was a good tip. Lord, I needed me a mentor. I needed me a mentor a long time ago. All right. Doing what it takes. You do whatever it takes to put yourself in financial wellness. You do whatever it takes to build your financial portfolio. You do whatever it takes to ensure that you and your family are financially secure. You do whatever it takes to ensure you have the retirement plan that you want, that you deserve in your later years. So 1, build your financial security. 2, grow your personal and business credit. 3, increase your streams of income. 4, leverage all your income resources. If you got credit cards, make sure you use those points. Make sure you utilize all of that. You have whole life insurance that you are building cash value on. Use that cash value to help grow your personal financial life or your business financial life. You don't have to go to a bank to get a loan. You be your own banking system for you and your family with your whole life insurance. 5, don't be scared to invest. I'm going to be doing my video soon about long-term investing. I don't do short-term investing, which means I don't trade. I don't sell and buy stocks to get a surplus of money. I do long-term investments. I let my investments, now I keep track of everything every week, every month, but I don't take out any profits until a year and a day. to save myself in taxes and to save myself, with the capital gains. But again, I'm gonna start those videos soon. So I will keep you posted. And number 6, as I stated, develop your retirement portfolio. You have control over your money. Learn to master the game that the rich have been mastering for generations. Anything I'm saying is not new. You just have to put action to plan. The information that you learn either is here at King's Legacy Group or somewhere else on social media or an organization, however you learn the information. Put action to plan. It doesn't make any sense for you to learn this stuff and you don't do nothing about it. You keep putting it off. You keep hoping. Something that's going to happen. You keep hoping you're going to get a man that's helped save you financially, or 2 incomes better than 1. It don't matter if it's 2 incomes if both those incomes are not doing what they're supposed to do to plan out their financial success. If they're not on the same page, working their money the same way, saving their money the same way, growing their money the same way, it's not going to work, people. It's just not. So, again, closing statement. We're at the end, and the storm hadn't come again, but I'm going to sign off so I can post this for the 7 o'clock show. What time is it? 6:34. So I'm going to post it before 7 o'clock so that you all can see it, because I don't want to be live and then my computer or electricity goes off. So, as always, I hope that you found some value in the content shared today. So until next time, please take care of yourselves and know that knowledge is the real power only when you apply it. And please, like and share, people. Like and share, like and share, like and share. Please, like and share, like and share. It helps us grow. Thank you. Have a good one. See you Sunday.